What's going on, guys? So this is going to be the trade recaps for today. Today being the last day of September. So this is going to be the quarterly rebalancing that's leading into, obviously, tomorrow we have a new week. We have a monthly candle closure. So let's get into some of these charts. I mean, I really wasn't positioning much of anything with heavy size today. Obviously, we had Apple as a potential plan here to start looking for a continuation to the downside off of a sweep of these relative equal highs. However, it kind of just built out a flag, really low volume chop right above this little bull gap. Like I said, we were short over here. That's where it was a great spot to start scaling and then reevaluating if this wanted to press into the gap and then start finding some sort of like lower high off of it to fill the entirety of the gap. That could come a little bit later for even a better risk to reward short. We don't know, but this was a focus of mine. I want to go over the focuses and then kind of like where I moved my focus to, because I feel like that's all important in context to what the plan was for the morning, and then leading that, adjusting that plan into like obviously the weekly open, the Monday open. So this was a gap all the way up here, right? So I figured we swept it, and then we were looking for like these relative internal equal highs that were sitting around 230, 229.45, and we swept that. However, we didn't really have a weak look on the close. The daily candle looks a little bit misleading. However, the volume is really, really low here. I mean, we're only getting 34 million volume. If you take a look at the rest of the daily range here, this is really low volume compared to the rest, right? And on the lower end, right? And we obviously have the quarterly rebalancing. Obviously, we'll have to see what happens after that and how the tape behaves, and then we could go on from there. So I still remain short Netflix. I don't really like the close that was going on over here. Obviously, when you go to the weekly, this is all, in my opinion, a distribution. I mean, this is covering the whole entire 2021 swing high. We got these really accumulative, capitulating looking candles. However, it's really increasing volume on a breakdown beneath the support, and then we start to change the character, find a pop, find a flag, and then obviously start to flag out, push, claim the levels back up, and then it was basically just a staircase higher with what looks to be distribution kind of starting within this general range, right? I always talk about how major imbalances within candles, within trends, need to be retested. This was a big consolidation break that led to a breakdown, a retest, right? That's all cool. And then that looks relatively healthy. And then as we push back into the range, this is whenever we start to get those high volume shooting star looking candles, followed by low volume digestion in between, and then lower highs, recorrections lower, and then really nice volume coming off of these bottoms here for now a higher low on the weekly, and then it kind of just pushed its way higher. The spread and range of the chart really diminished into this high, and then that's whenever we got our breakout on really nice volume. Ever since then, guys, we've been creating these highs. These highs we're starting to get incrementally sold high by high, right? So high sold, high sold, high sold, mark down. Really nice volume on the markdown, followed by then another high over here sold. And then obviously from there, what happened was we then get another high sold. Okay, so this is all just higher highs that are kind of being sold off and kind of just eliminating any sort of demand and a campaign that was building into this swing high over here. If you go to the daily chart, this was where the earnings candle was a little bit almost like stopping volume within the chart, and then that's whenever we pushed down the whole entire market. The NASDAQ, all of tech got that footprint candle on August 5th, and then that's whenever we saw the relief, and then this saw a new high and made an all-time high, right? And then that all-time high actually stalled. We got seller dominant looking patterns over here, and then that's whenever we started to fill the gaps beneath us, put in higher lows on the daily and the weekly, and now we're pushing for another attempt of a break right off of the 2021 swing high. So like I said, I don't necessarily know what happens with the Netflix trade. It could see a little bit more of a terminal shakeout, followed by a big footprint up here, and then a push down, a lower high, and like a failure off the original level of 2021 swing high and then a recorrection lower, and then that could be where the distribution starts at. But we are sitting within almost, it looks like it's not technically two inside bars, however it kind of does look like that. Obviously Netflix really didn't have much of any strength today. We are sitting beneath the level that makes a lot of sense. This was the previous swing high that looked like it started the distribution, as you guys can see, relative to the rest of the range. We have seller dominant candle off of the earnings report, and then our second heaviest bar is a new high that was actually created. We have a little bit of volume traded throughout the range of the earnings candle, right, which is heavier than this candle itself, it looks like, but this is the heaviest volume that we've seen relative to the rest of the range. And then the volume really started to dry up as we made these new all-time highs, and everything just looks really not too strong. I mean, we're getting double inside bars followed by breaks, and then those breaks lead to not even a singular daily bar of continuation, and then we get failure back underneath like where the levels are that we should be basing if this wants to stay strong, right? So whenever we look at something like this, it's very critical to say, okay, yeah, I mean, this could be definitely some sort of failure. This could be a potential change in hands for the time being. This could be a quick little news markdown that's going to happen for us here. Who knows? I would really like to see mid to high 600s, so like 680, 670, 660 is a valid target that I do have in mind. 679 marks the spot for the earnings candle high, and then the previous swing high that we have over here that led to our second cycle of distribution is 697-ish, right? So if we crack 700, we start to give up this level here. This definitely does line up for a decent failure and a push back down into at least 690, right? And then I actually took my ads over here on Wednesday and Thursday at 623, right? So this was about a $20 fade from entry. I have never scaled. I'm still looking for relatively tight risk on this trade, given the fact that we are trading near the session low of Thursday, and I executed on the session high of Thursday. Like around that range, about like the upper wick on the Wednesday candle itself would be a better description for that. So we'll see how this one plays out after this quarterly rebalancing gets by us, which was today at the end of the day. HIMS was a nice trade that I've been keeping in mind. We have simple buy-side structure kind of happening here. We tested the Q2 of 2024 earnings candle high over here. This was a simple undercut, actually, guys, right underneath the gap, followed by a claim, and then a really nice fluid move higher that had almost little to no problem moving its way back up. And then this is whenever we started to base the progression areas from this gap, as well as the larger perspective of where kind of we're fighting for in the chart. It's like where buyers are going to be bidding and sellers are going to be selling. Okay, so they held this with a nice little daily wick, and then that's whenever we started to push our ways higher, and then I just simply took the break of structure that was sitting over here. So what I mean by that is, first of all, if you like take a look at the volume patterns of the chart, we had earnings right here, and this is actually a markdown followed by a recovery and basically a flat day for the stock. I mean, this is a decently wide ATR. It was plus 1.48% after the day of earnings. And then we got a inside bar, decent volume with a wick behind it, and then we bled a little bit lower, and then we got this like hammer looking candle, doji looking candle right off of the gap, okay? And then that's whenever we started to get this gap down, followed by a potential breakdown that was happening. However, it just never held successfully. And then we started to reclaim back above, claim back into the range, the important range where this is a gap. This is the top of the gap of where a failure actually happened at, right? So then I just look at the lower highs above us, attempts of lower highs, and then I look at the daily bar. I go into smaller time frame price action here. This is the Friday candle where we bled actually right off of the open. If you go into the 15-minute, I mean, it's just a simple smaller time frame support that's sitting here, and then we got the red to green closure with a nice daily wick on this candle. So that's whenever I was just simply looking for this to be some sort of like daily SR flip into a claim back above the range, a hold of the range, and then now we're looking for just a simple move off of somewhere that defends the body of this day, right? So typically what I'll do is that if I feel like there's traders that are trapped underwater here, and then we're developing structure, we're getting a valid break in structure from sell side. We have gaps above us, first of all. We have daily level retests that are sitting here, right? So you don't even have to pull the gap. You can look at like the 1880 up into like the $19 range. With your trailing being somewhere off of the body of the previous day. You could take the body and like maybe the high, since they're all relatively close to one another, go into your 15-minute, and then this is whenever you could start thinking about executing some sort of HIMS position. I mean, you can get in off of like smaller time frame progression gaps, something that looks like this, or at least risking the top of this. But whenever you're looking at like the wider perspective of this, guys, I mean, it's just a simple cross into the EMA and then a pop and then a closure above. And now we're looking for continuation off of where this high is, as well as like the upper range of this candle. Go into your 15. Like I said, I mean, this is a really simple trade. You're not going to get the prettiest price action with HIMS, but yeah, we put in a low and then we started to recover. And then that's whenever we started to flag. The opening print for the day is right here, which is actually very important. It's actually up here in my bed. So this was a nice little pullback and a hold with a bounce coming off of the wider time frame level, and then you get this like you get this 15-minute candle where you could find some execution off of. And as you guys can see, I mean, from here up into here, this is a 4% move on the underlying. Calls ran like 40% here. Not the biggest gain ever, not the smallest. I mean, base hits are totally fine on a day like this where it's the last day of the month, right? So I also took SQ. This has been on my focus for a very long time. The daily candle isn't really nice, but this was more of an intraday basis type of trade. So why is this an intraday basis why am I trading this on smaller time frames? Well, it's similar to the HIMS chart. I mean, we're getting this daily candle structure, these two bars of really, really, really tight ranges to be dealing with here. Increase of volume on Friday, and we get the nice reversal on Friday, where this started to close back up towards its opening print range. It technically closed red on the day. However, this was just a really nice area. If you go into the daily and then take a look at the gap, this was just a really nice area in terms of like where we would start looking for higher lows, because we're getting the trend break, right? And then we're getting the potential spring and failure down here. Okay, and then we got the higher low afterwards. If you want to take a look at like swing low, swing high, this was right off of the golden pocket. And then if you want to take a look at your fibs into the next following little pivot low to pivot high, it didn't quite test into equilibrium. However, that's just a gauge for risk, guys. I think some people pull fibs a little bit too much in terms of like analysis and trying to figure out where a buyer will step in at, and that's not always going to be the case. It's just more of a gauge for risk. This chart was really beautiful. I was just looking for a simple third daily higher low potential off of these two wicks. Okay, and then we have a similar risk tolerance over here. So whenever you go into the 15, this is going to be your daily gap. Okay, so I don't have this necessarily marked out intraday, and then this is going to be your opening print. This is your previous week's closure up here, and then if you go into the pre-market session, you'll be able to see this a little bit better. But this got a nice rip and a nice candle closure above the previous day close. And then what happened was I took some calls. I got some ads. These went up and they popped pretty high. If you go into like the hourly, this was a decent spot to start scaling. If you go into like the daily, I mean, you're in a range of resistance, right? It's not necessarily something that, but bottom line is, guys, here, let me get rid of the gaps. Bottom line is that your risk is down here. Okay. And it doesn't even necessarily have to be down here. I could have also been risking the last week's closure, which I was after I went green up here, pulled back. If you want to take a look at like swing low, swing high pullback from pre-market to the high that we currently had, it was just a simple pullback into the 67 area, which was equilibrium. And your risk could have been obviously bumped up into something like right over here. And I actually went back to break even on these. So I scaled a decent bit, went back to break even, and then I added a little bit more, and then I got another pop. Whenever I got the next pop, and then it started looking like we were getting a little bit toppy up here into a resistance, that's whenever it's a great spot to start thinking about scaling. Decent little win here, nothing too crazy. The risk wasn't even a lot at all. I mean, even if it went red, I grabbed some ads on like this closure. So whenever I see a closure and then I'm looking for a retest and I don't get fully filled, and then we get a nice little pop, and I'm risking this spot right here. I mean, we're looking at like a 3R intraday trade. Obviously, my target would have liked to have been all the way up into here, which would be a 4.4R. However, I mean, you get the retest once again, really clean, stress-free. I mean, there wasn't really anything to worry about here. You guys have to be able to sit through pullbacks that look relatively weak for you to find the continuation. Another risk tolerance that level that I had in mind was if you go to the previous trading session, because the previous trading session does mean a lot, guys. Go to the opening print, because this is technically a gap here. Okay, so this is your close, this is your open. Go into your 5, take a look at this, and it's just simply flagging off the top of the opening print on this gap up. Right, so this was a great opportunity to start thinking about taking a ad, or to start thinking about re-rolling. And like, if it goes back into your average, there's not really a big deal with looking at this volume and looking at this 15-minute to re-add this thing to test into like higher resistance areas that need to be taken. Something like all the way up into here, right? This is a gap failure range, okay? There's just a couple areas where you can definitely think about targeting that are a little bit higher than where our current target actually was. So yeah, I mean, that was basically all there really was to the trade. It wasn't anything crazy. I'm not looking for a multi-day swing. This is a similar name if you go over to PayPal. And PayPal is just one of them things that have been on an absolute crazy run, right? So I'm just looking at a simple sympathy play. Like I said, I mean, the risk was probably 20% at most on this, so it's not a big deal. My better trade was this one. So if you go take a look at the weekly, guys, what does this weekly chart tell you? Let me hide the drawings here. I'm just going to hide the drawings, actually. What does this weekly chart tell you, guys? Don't even look at really the volume. And volume from all the way back here doesn't necessarily matter. But what does this weekly tell you just for short-term trading right here? It tells you that this is basically looking for some sort of higher time frame, higher low. We got a really nice recovery from the 5th, obviously the whole entire gap down that was accumulated within the market. And then we got a really nice positive heavy volume earnings reaction on August 20th. This was a double beat on EPS and revenue. Doesn't really matter, but we're just looking at the volume. We're looking at the effort, a lot of effort, and also a lot of result. Price moved a lot, plus 7% on the underlying on August 20th, which was our report. Okay, and then this was also kind of all battling for the close of this bear gap that's sitting at 366.09. And then we closed it We obviously saw an inside bar afterwards, followed by another inside bar, followed by a sweep of the candle, followed by a fill of the gap, followed by a pop. This is where I caught PANW for a really nice win. Really harmonic volume patterns that are sitting up here. However, we don't know if this seller is going to sit here. We don't know if this buyer that was buying over here for the report is going to sell and then repurchase higher into this resistance, right? I mean, the market was gaining a little bit of weakness leading into the beginning of September as well. As you guys can see, the NASDAQ fell 3%, and then you go over to something like PANW, and this name has not really fell a lot. I mean, obviously we got the September 4th gap down, but intraday wise, this name was never really that weak, and then we started to find a lot of consolidation. If you're looking at this consolidation range here, guys, this is not even a really big range for the name, and it's kind of just digesting that whole volume that poured into the name over on August 20th, and this was a 13-day digestion period that led to a break of the range. Okay, and in that break of the range, what would a healthy break of the range bring? It would bring a higher low and then a continuation, or it would bring a simple break and then a retest and then a continuation off of the bottom support range that was lost, right? And neither of those happened. It was a breakdown failure out of this support range that we're looking at right here. Okay, so this was the initial support established, and then what happened was we reclaimed above the range. We obviously found a buyer off of that range on increasing volume, and then we pushed our ways higher back into like what looks to be like a little channel, okay, like a little trend line, whatever you want to call it. And then there's no true way on how to draw these. I don't really like trend lines. It's just a gauge for higher lows and lower highs. And then what happened was, if you go into the hourly, this just looks like a simple pullback into mitigation from this side that was caught in the breakdown failure. If you want to take a fib from low to high, start looking at like your 618 or your equilibrium, start thinking about taking some ads here. And this was just a really nice trade where, okay, we're getting a really nice pop off the open. We're getting obviously heavy volume with like this reversal looking pattern, and then the volume dried up into like 945. And then if you really want to take a look at like an intraday entry off of EQ, you can. The risk wasn't the greatest here. However, I really just wanted to get above this pre-market print and then start looking for continued upside after we claimed that, after all of the volume kind of flattened out and all of the supply was kind of wiped out of this range. And then we were approaching what looks to be just this big mother candle that's sitting over here that is also kind of in confluence to the earnings gap. Okay, so this is the earnings gap. This is your resistance. That's your fibs. Like I said, pull from bottom to top, go into your hourly, look at the volume, look at the structure. Is this structure really that strong to you? I mean, to me, it's really not, especially given the fact of how compressed and how low volume chop we kind of had into that Friday closure. And keep in mind, guys, this was a big gap up that was actually sold. So whenever you're establishing an orb right off the open and then you're only making progression in the next few trading sessions or 2 days of not even a little over a 0.28% move downwards from the orb on Thursday. I mean, that means that there could likely be a buyer that's sitting over here, guys. I mean, we consolidated within this range for a very long time. And we kind of tested into equilibrium of the candle and then found no seller to press it lower beneath the low. So it was just one big breakdown failure from the lows, followed by a reclaim into the range, a push higher, a pullback into mitigation, where this side over here that was a buyer is protecting what they've reclaimed. It's a very simple concept, as well as if you go into the hourly, this is the big progression gap that everyone is looking for and fighting after. Now, that's a very wide zone there, because this is the breakdown failure spot. It's not just a gap, it's also the breakdown failure spot itself, as well as like where this support was all kind of created at. So whenever you're looking at this and you're finding wicks into it, and then you're finding these lows that can't really like make any move lower, it's not a very good look, right? I mean, we're likely going to put in some sort of higher low and recorrect our way higher. So now what I would be looking for is, I still own some of these because this is one of the cleaner looking charts in the market. It's just runners because I have to be able to realize some wins right now. By the way, those Tesla swings that I've been talking to you guys about a lot have been really beautiful, really smooth on us right into the swing high at 265. If you're not cutting these, you should be cutting them. You should have bought time here with either some leaps, monthlies, a few months out, 6 months out, whatever you want to do. This trade was very compressed down here and bringing really nice potential volatility for us to get good risk reward on almost any expiration. I added some Marvel today. I'm holding these, but like a lot of my trades are not too serious with a lot of size right now, guys. I've been talking a lot about this gap over here. I posted on Twitter. I think I posted it in the Discord. This is just a really, really nice range where I think a higher low can come on like the daily chart. Let me get rid of the rest of the levels and really just dial in on like what I'm talking about. This is the earnings candle. This is the reaction. The gap up actually happened all the way up into here, and then we cooled off. We got some blood the next following day, and then the volume started to dry up, and then obviously we put a higher low in off of where this gap was that was untested. And then we push our ways higher. We reclaim into this gap. Now we're looking for like a simple higher low, right? So pull fibs if you'd like. Look at your equilibrium. We're already within equilibrium. So I'm just looking at like the support ranges, potentially a sweep, right? I would be looking at like where the low is at. Maybe there's some equal lows that are sitting over there. And we actually just simply double bottomed off the spot. So I took some ads over here, took some ads the next following day, which would be this morning. We got a really nice strong close. So let's see what this one does, what it has in store. It's very light, right? I mean, I'm looking at like getting a little bit of leverage on some calls here, a simple risk underneath the level with ads right above the level. It's like no more than $1 and like 10, 20 cents of risk. With like a potential upside up into the upper extremes, and then a path of least resistance model would bring this to near those earnings candle high ranges, which is about a 7-hour trade. This is a semi-name. I don't necessarily know exactly when we're going to get the expansion out of this range. However, this range is very, very, very well established, and it's very, very big. Whenever you're getting like a spring down here and then a fake out higher lows and then potential another higher low, that third higher low can potentially bring the expansion off of this gap that had a lot of volume behind it if they want to protect that range. So, I mean, I'm just looking for this to reclaim level by level. It's a simple level to level trade. 75.45 being the first initial target. That brings like a 6R or 5R. I actually own shares here, and that's more of my positioning rather than the commons are, or the calls are. So yeah, I don't know. We'll see. This is my CRWD chart. We have a big gap here, and I added some time on calls Friday. And then on Friday, what this was here, guys, was just a simple overnight gap closure. So we actually got the gap up, and then we closed the gap, as you guys can see, right over here. And then we kind of just based above where that overnight gap was at. Okay, so it's a little bit weird of a chart, but like I was just simply looking for like some continuation. We unfortunately didn't get that. However, my risk tolerance is for something down into here, right? So if I'm looking for any sort of ads, it's into the bottom of this gap. Okay, so I don't really mind this position. Like I said, it's not serious size. My bigger trade is going to be is not going to be. It's this one, and then that's all my trades are for now. But if you're looking at like CRWD, it's the same sector as PANW. Got a really nice intraday win here. However, I'm kind of just done with this one for now. I could look for re-entries on PANW just because I feel like the risk levels are a little bit cleaner here. This one's more like I have to incrementally add into the bottom of the gap and then look and see if we can get a daily high or low off of like this daily range. And then obviously above 285, I could start thinking about rolling, looking for higher lows above, and potentially even sizing it a little bit more aggressively once I find that buyer, get the confirmation, get a little bit of leeway with a position going, and then thinking about sizing up into like a really heavy size position to target back into the high up at like 300. So that would be a $15 to like $20 move potential there. Not anything crazy. Decent, but it wasn't anything that like, yeah, it just wasn't like that clean of a trade, to be honest. I mean, like, I don't have to be taking ads into these things right now, but I'm getting myself some wins that cancel things out, so it's cool. I mean, trading hasn't been like something that has been like feeling so amazing as of lately, but right now, guys, it's just a simple waiting game. So the other things that I did miss that were on my radar, something like AVGO was actually one. However, I mean, the opening wasn't attractive enough. There was no attractive pullback at all. This one was kind of just weak price action all day. But SMCI is actually one that I missed. This candle scared the shit out of me, but this just started to consolidate and hold this like a champ, this 382.80 swing low. And then we kind of just got this really nice relief right off the open into today. My Disney swings, I cut a little bit more today. I still own some, but I cut a little bit more today. We got a cool off day. EMAs are a little bit beneath. We have these levels right here above us. Let me take these off, and then you go into like smaller time frames, and this was like a nice gap up into 97.50. 97.50 kind of marks the spot of like just a good spot to scale on any of these days, honestly. Friday, Monday, even Thursday. So yeah, I mean, those were the only trades for today. I took a small little win. I don't really like any of these trades, to be honest, because they go against my rules. That's why I don't like to talk about them and share them as much. However, JPM was a decent little short, chance of a short, because I didn't make anything off of it, but it wasn't the worst thing in the world. All I did was add a little bit of puts off of this massive gap recovery that led us into like the gap closure. But the target was already hit. I was looking to short this thing for a move down into like this zone. Obviously, a sweep into this gap over here is something that makes a lot of sense, right? And then the gap actually continues itself all the way to the bottom, which was also the preliminary distribution level that was sitting over here. This is also the big area that the market was gapping down off of, followed by recovery and then a nice move higher. This is also the major liquidation day that has a nice little wick behind it with a closure on it. So as you guys can see, it ties in a really nice confluence with this gap. That's a great spot to scale a short if you were already short from over here on Friday, Thursday. Unfortunately, I didn't get my hands on enough of a position over here to short this thing down into 206, 205, 204. So yeah, I mean, I'm glad that I'm kind of almost glad that I didn't have it, because I feel like I could have been up a few. I feel like I could have potentially made my week if I was adding this thing into the Friday high, or even off of like Thursday and then Friday, Tuesday, Wednesday, Thursday, Friday, and then I finally get the expansion. And then it's just a big letdown because the target's hit right off the open. So if you don't get a fill and then you try to hold this for potential like continuation into the bottom, you're going back break even from what would have been a really nice trade. So it's not even a big deal that I didn't short this. It was included in the scan if anybody did watch that. So yeah, as far as any other charts go, guys, I haven't really been looking at any. Haven't been really wanting to touch any. Tesla's been a really beautiful chart. Microsoft might not be a horrible trade. It's been trading absolutely terribly, so I'm not a big fan of this at all. And then we have a really critical weekly area on Microsoft too. So I don't know. We'll see. But the market looks a little sticky as of right now. It looks like there's going to be a lack of continuation to both sides. So what does that tell you about your trading and what trades you need to be looking for scaling on an intraday basis? Because you guys might know me as catching these nice multi-day moves. However, you have to be able to adjust. You got to be able to adjust to what your you have to be able to adjust to what the market is telling you. Sorry, I was getting a couple texts, but yeah. With that being said, guys, I'm going to get going. Yeah. If you guys have any questions, please let me know. And hopefully some charts come around our way here soon.